Manoj, have a great day. So that's Religare Broking with their views. Ujjivan Small Finance Bank is the first corporate that we're speaking to this morning. They've raised 475 crores via the QIP route. Ittira Davis, the Managing Director and Chief Executive Officer at Ujjivan Small Finance Bank, joins us now. Mr. Davis, thanks a lot for joining in. Tell us about the fundraising. In fact, you've already raised the money and your Tier 1 ratio has now strengthened to 22.4%. How do you see loan growth moving along?
Good morning, Sonia. It's good to be with CNBC soon after we have completed the QIP raise. Yeah, it's a good position to be in because, as you said, the Tier 1 is looking good. We have also had some Tier 2 in the last few weeks. In the last month, actually, we have raised a total of 775 crores for capital. And our capital ratios are now back to the pre-COVID levels. Tier 1 and Tier 2 together are 26%. And that's a fantastic level to be in. And that gives us all the impetus for growth and also for the reverse merger.
Is there a reason why there are only insurance companies as investors in the QIP amongst the institutional clients? Is there some correlation of the bank assurance work?
No, there are insurance as well as other investors. We have some foreign investors as well, and some other funds have also joined us. The reason we have the insurance companies is that we are partners with them in the insurance business, and they have been with us for a long time. So I think they are long-term partners. So that is a good position to be in, and we are looking for long-term investors because Ujjivan has a plan for several years ahead in terms of growing our business in the mid-market, and looking at that segment of is a big segment. And we'd like these partners to be with us. And we will be having further capital raises in the future. I think that's important.
Mr. Davis, could you tell us how's the disbursal momentum so far in Q2? We are also entering the festive season. Post this fundraise, what are your growth targets from here out, FY23 and beyond?
Good morning, Prashant. Yeah, I think, we have had a very good first quarter. The results talk for themselves. The second quarter is going in the same direction. And, disbursements are doing well. And I think, as you rightly said, the festive season is around the corner. There is a pickup. But the only damper which we are closely watching is the interest rates. Because if the interest rates, go up further, then the markets may slow down. But as of now, it's looking very good. And I think for the rest of the year, we are on the right track.
So when you say on the right track, Mr. Davis, any guidance you'd like to give us on disbursement growth and credit costs?
No, the overall balance sheet growth, I would say, is heading between 25 and 30% for the year. And I think that is the level because we have different businesses. So disbursements, the first quarter was very good compared to the previous year first quarter. So, and that trend will continue.
Okay. I just had a follow-up. You said that you're partners with the insurance companies who have participated in the QIP. What kind of growth in the business are you expecting from these partners?
I think, post-COVID, the response to insurance policies and general insurance has picked up because people are looking at health insurance more positively these days. We have the credit life, which is linked to the disbursements because as the disbursements go up, that part of the insurance also picks up. So if we are seeing a good record level of disbursements, the insurance will also follow through on that.
Okay. Mr. Davis, you said that if interest rates go up, right, is that already starting to impact at the margin? Because rates are expected to move higher a little bit more. I mean, globally, interest rates are moving higher. That will be the case here as well, maybe a little lesser than elsewhere. How does that impact you? Your cost of funding, also, borrowing at the margin from customers. Could you tell us?
Yeah, the cost of funds is leading the rest of the market because I think, the lending rates tend to follow. And that's because the market is also a bit tight with RBI taking out a lot of liquidity from the market. So interest rates across the board, not only just among the small finance banks, among the bigger banks as well, we have seen a hike in interest rates. And that has not been matched as yet by the hike in the lending rates. So, NIMS is getting a little squeezed across the industry. We have also seen a slight fall, but we are managing it very well. It's fallen by a few basis points. And the issue is to make sure that it doesn't fall. We have budgeted a 50 basis points drop during the year, and that is something that we can live with. So if it is a little more than that, it'll put a little bit of stress. But otherwise, we are managing the NIM ratios quite well.
Okay, well, the stock has had a very, very smooth run. I mean, it's been a 60% growth in the last 3 months alone. Finally, then, Mr. Davis, any inorganic opportunities that you're looking at, any acquisitions that perhaps you're looking to do within this calendar year, or are you looking to get acquired?
Well, all good questions, but we are currently focusing on the reverse merger. Once the reverse merger is completed, then we can look for inorganic opportunities. And I think there are some things that we need to look at. So, as we complete the reverse merger, that's something that we can discuss.
As an acquirer or a potential target?
Well, I think for now we'll be looking at acquiring.
Okay, post the reverse merger.
Post the reverse.
Got that. Mr. Davis, thank you very much. Good speaking with you, sir. And thank you very much for your time here on the